Hello and welcome. You're watching Business Plus. After scaling new peaks, Indian markets succumbed to profit booking and ended on a flattish note today. With me to discuss markets, key indices and all stocks to look out for in the remainder of the week. In the studio is Suyash. Also joining us is Amit Kumar Gupta, who's the founder of FinTech Capital. Let me straight away go to my colleague Suyash sitting by. Suyash, I want to understand from you, how did the markets perform and what were the key indices that did or did not do well?
So, Shweta, it was a very volatile session for the Indian markets today. In the early part of the session, Nifty scaled a lifetime high of 66,000 for the very first time. But then we saw, some profit booking, and the markets ended on a flattish note, but with a positive bias.
Okay.
Now, at close, Sensex was up about 164 points. It touched an intraday high of 66,064 levels and an intraday low of 65,452 levels. Now, Nifty, on the other hand, ended 0.15% higher at 19,413 levels. Today, it touched an intraday high, which is also a lifetime high, of 19,567 levels and an intraday low of 19,385 levels. Now, the broader markets, which have been outperforming the headliners, underperformed benchmarks today. Nifty mid-cap index was down 0.81%, whereas the Nifty small-cap index ended 1% lower.
All right, so very volatile market out there. Nifty and Sensex both at a lifetime high, but tapering some of their gains on the back of a lot of investors perhaps booking profit. But I think one of the key major sector to look out for this week would be the IT sector, Suyash.
Yes, as we know, the earnings season are on, and IT companies are the first to come out with their quarterly results. And even the Nifty IT, which has been a laggard, in 2023 so far, it has just given results, returns of about 3.5% compared to Nifty 7% rise. So it was among the top gainers today. The index was up 1.75%. Among the top gainers also, there were a few constituents from the Nifty IT pack. TCS, which came out with its results yesterday, was a top gainer today. It rose about 2.47%. Infosys was another IT bellwether, which was among the top gainers in the Nifty pack. It rose about 2.39%.
All right, so IT stocks doing particularly well, also anticipating better results. But the results that have come in so far, and let me get Amit into this conversation. Amit, good afternoon. I want to understand from you the results that we've got so far, both TCS and HCL were not very promising. However, the muted expectations meant that the profit, the revenue were in line with what the industry was looking out for. Is that perhaps the reason why the stocks are doing better than expected?
Yeah, hi, thanks for having me. So yeah, you were right. Actually, the expectations were quite low from this quarter results after what happened with the US banking crisis in March. So even though the scare from that crisis is largely behind, there seems to be very high caution among a lot of IT clients that is getting reflected in the cuts of discretionary spending for most of these companies, and especially the large cap companies. So I think both TCS and HCL, they sort of had a margin dip, and both of them have, reported cuts in discretionary spending and clients not committing much until and unless the return on the investment is visible. So I think that has a reduced scope of long-term discretionary projects and project ramp downs in the near future. So I believe this condition would probably stay for at least 1 or 2 quarters more, and then only we are going to see some sort of a upside. I think if you look at the commentary, then the one common thread which I've seen is the fear of AI, what AI is actually going to do and how it's going to impact the project ramp up going forward. That will be very critical to know, because it will not only impact the client side investments, it will also impact how many people you want to hire. So there are a lot of ifs and buts of how the artificial intelligence is going to impact the IT sector. And I see a lot of caution, from the IT companies in these two results.
All right, and the inflation numbers that also came in from the US, particularly hinting at better expectations in the upcoming months as far as FOMC is concerned. We will have to, of course, wait and watch out for whether there's going to be a pause or a cut, if at all that's possible. Amit, what are your expectations?
No, I think the rate cut expectations are, off the table for at least this calendar year. Uh, as far as India is concerned, I think the recent food inflation, which is reflected in the last yesterday's, yesterday's inflation number for India, that is not going to cool off very quickly. So I think the prices of certain vegetables which are high, I don't see them going down for the
Right.
next couple of months. So I think that is off the table. As far as US is concerned, my sense is that there were a couple of prices which were very high on a year to year basis, like used car prices. So that has gone down, and that's why the headline number is also taken a dip. But having said that, interest rates are still at, the bond yields in US are at still at 4%, and there is a very high chance that we are also going to get a rate hike by the end of this month from the FOMC. So I would, hold my horses for rate cuts at least in this calendar year.
Okay.
Probably early next financial year, we are going to see some rate cuts.
All right. And by when do you see the discretionary spending going up in the US?
So I think the discretionary spending at this point of time is not so much of a concern, but that is all leveraged, leveraged consumption which is happening through credit cards and through short-term loans. So my sense is that until unless there is some major crisis happening in US which will impact the markets, don't see it really falling off the cliff, but it can definitely slow down because with the 2% growth and 4% inflation, that will be sort of a recession-like conditions in the US. So my sense is it may not drop off very significantly, but it can slow down a little bit before picking up again with the rate cuts happening next year.
All right. And before we move on, I want to quickly also understand how gaming stocks are doing, because that's an important story that we continue to track here on News9. The impact of the 28% GST levy on gaming stocks. And we were tracking, the dip that Nazara stock has taken. What is the outlook looking like for gaming stocks?
So, Shweta, like the gaming stocks continue to fall on the back of the July 12th report that came out, that GST Council is looking to levy 28% tax on online gaming. So Delta Corp, which fell about 23% yesterday, was down another 5 to 6% today. Nazara Technologies, which was down about 2% yesterday, declined another 3% today. Zensar Technologies, which surprisingly was an outlier yesterday, it rose about 2%, continued to post decent gains in today's session. It was up about 3%. On Mobile, which is a fourth listed player in the online gaming space, which was down about 1.3% yesterday, was down about 3% today as well.
All right. All right, so that of course is the big news coming in from the gaming industry, and we continue to track all the stocks and stock related news. I suppose you had a question for Amit before we move on from stocks.
So Amit, actually I wanted to come back to the IT sector. I mean, if you look at TCS's strong order book, it remains at about 10.2 billion. And even though HCL as well, like it said that, the order book fell to a 12 quarter low, it is optimistic about, the demand picking up over the subsequent quarters. So is the slowdown in the IT sector a transient phase, or and how does it look in the long term?
So I think in a short term, the outlook is a little hazy. And at least I would say for both June quarter and September quarter, it's hazy. The main reason is that, the BFSI sector, the banking, financial services and insurance sectors forms almost 30 to 40% of the revenues of major large cap IT companies. Along with retail, if you include the retail sector also, then it's more than 50%. And all of these sectors are actually soft at this point of time. Some of the sectors like life sciences, healthcare, manufacturing, that is showing some resilience. But the majority of the sectors are, sort of a little soft and the expectation is that they are going to remain soft for the next quarter as well. So my sense is that we don't want to extrapolate this slowdown too far in the future. These are strong companies and usually have come back after every down cycle. But the normalization is not expected for at least next couple of quarters till this situation about high interest rates in US and bottom end getting crushed in the IT sector. That phase is not over. Then we can have a look at IT sector
All right.
again.
All right. So high interest rate regime in the US is going to keep impacting or is likely to continue impacting IT stocks in India. We will of course come back to that story.